Good morning and welcome to the Axis Securities Morning Podcast. Today is Monday, 6th January and the time is 7:30 a.m. US stocks rallied on Friday driven by technology. The Nasdaq 100 climbed 1.7%, the S&P 500 rallied 1.3% and the Dow finished 0.8% up. Meanwhile, the Magnificent 7 outperformed with a 2.5% jump. Elsewhere, data from the Goldman Sachs Prime Brokerage desk showed that hedge funds raised aggregate short bets on US listed ETFs by the most in 4 years. Elsewhere, the dollar index fell 0.4% on Friday but has now risen for 13 out of 14 weeks. US Treasury yields continue to recover from their near-term retreat. Bitcoin rose for the fourth straight session. Gold was able to clock a small gain for the week, while NYMEX oil jumped 4.8% on support from colder than average weather conditions in Europe and the US. At home, the rupee finished the week 0.3% down, with the currency finishing at a fresh record low of 85.78. FX traders continue to pile up on rupee bearish bets in the offshore markets, with increasing demand for dollar call strikes above the prevailing spot rate. Talking stocks in the Nifty gave up some of its Thursday surge on Friday as it dropped 0.8%. The India VIX fell 0.2 points. 5 of the 12 sectors rallied, with media jumping the most at 1.7%, while IT sank 1.4%. Breadth was negatively skewed, with 2 stocks gaining while 3 fell. ONGC was the best performing stock as it jumped 5.2%, while Wipro fared the worst, dropping over 3%. Speaking technicals, the close above the gap down area of 24,150 should have, as we had mentioned, seen immediate follow through, but that was not to be as volatility sellers remained more aggressive. The immediate upside barrier remains 24,157, followed by the critical 24,306 level, while near-term support lies in the 23,880 to 23,976 zone. Our prop oscillator has turned bullish on the dailies from oversold territory, while the weekly remains bearish. Coming to flows, and foreigners invested over 1,600 crores on Thursday as per CDSL data. The month-to-date flow now stands at over 1,000 crores. On to derivatives, the Nifty's put-call ratio went from 1.22 to 0.86, while the Bank Nifty's went from 1.03 to 0.83. Nifty calls were liquidated while puts were added and implied volatility rose 50 basis points, which means that on a net basis, market participants turned cautious. The FII index futures long-short ratio went from 0.24 to 0.21, which meant foreigners flipped back to bearish. Looking at options concentration for the weekly contract that expires on the 9th of January, the trackable range has shifted lower to 23,700 to 24,200, with the most call addition in aggregate at the 24,100 and 24,200 strikes, defining a resistance area. Volatility traders were expecting the market to retreat on Friday, and their bearish stance continues as the demand for protection on out-of-the-money puts rose, while that for similar distance calls dropped. Looking at sentiment via net activity in index options and index futures, foreigners and particularly prop traders went bearish, while retail traders went aggressively bullish. Looking ahead, the GIFT Nifty was up 70 points. Asian equities were all trading lower. Talking stocks, Apollo Tyres was at horizontal support, while Adani Enterprises, Berger Paints and Aarti Industries were at horizontal resistance. Ease My Trip, Angel One and Sun Pharma were at trendline support, while Elecon Engineering, Escorts and LIC Housing Finance were at trendline resistance. Talking key moving averages for the NSE 500, 50%, 37% and 50% of stocks were above their respective 50, 100 and 200-day moving averages. HSBC services and composite PMI numbers are due for release today from India, while S&P PMI numbers, durable goods orders and factory orders are slated to release from the US. That's a wrap on the day's podcast. Have a nice Monday and we will see you tomorrow.